Okay. Good morning, everyone. Good morning, Rohit.
Good morning.
Uh, yes, Rohit, you're not audible, I guess. Yeah.
I should be.
Yes. Perfect.
Yes.
So,
Okay.
good morning, everyone, and welcome to yet another webinar. And today's webinar will be based on RMI plus valuation for medium term and long term investments. Basically, Rohit, the founder of Strike and India Charts, will be taking you through the webinar as usual. He'll go through his presentation, he'll explain everything, and then we'll take up the Q&A. So, yes, thank you so much to all the people who are joining in. I'm sure there'll be many who will be joining during the session. So, Rohit, you can start.
Okay. So, good morning, everyone. Nice, crazy Sunday, but a good time to actually look at all this because in crazy markets, the thematic has to be what do you do, right? If you are going to invest, where do you invest? And or is it just that the market is done, right? We've heard so much about valuations are very high, market will fall, but market is not falling. So the alternate strategy is if there's a lot of money in the system and there's a lot of liquidity, liquidity has to go somewhere. So where should it go? And why should that decision only be taken by somebody sitting on a 1 lakh crore mutual fund? Each and every investor, each of you should be able to take that decision, and it's very, very simple. It is not so complicated. All you needed is data, and the data is now there on strike for you to be able to judge which sectors are overvalued, which sectors are undervalued, and where should you shift your asset allocation. You can do it systematically, you can do it aggressively. That is individual to each person, but that it can be done and that we can identify these points is the most important takeaway here. And we are going to look at how to do that. To do that, what we've really done on strike is we've combined two things. One is our understanding of momentum along with our understanding of valuation. Some of you may already be aware of what I do in terms of the theory around long term, which I call as value wave, which is essentially a combination of the value in a stock and where it is in the long term cycle. uh, so while I was doing that, essentially I was doing it at my end. It required some study of the balance sheet data or understanding valuations, but for most people the data is not clearly available unless you open read a balance sheet. Then how do you do the valuation? So now, if you have valuation metrics readily available and the entire historical chart, you can actually make that judgment very, very quickly. And that's what the stack valuation setup actually allows you to do. So this is what we'll study. We'll look at it, we'll understand how to read those charts, and then take your Q&A. I'll show you a couple of interesting examples from the recent past which are showing up. So that will also give you insights. I've also written about some of them, but as we look at them, it will be even more interesting. In fact, today in the Economic Times, there's a article about earnings growth slowing down. Right, it has slowed down to a I think 7% revenue, 9% PAT from what used to be almost a 27% PAT last year. Now there are two reasons to it. One is, of course, the election season. Maybe spending was less, government, and it's the monsoons. That's also a seasonal cycle. So there could be an uptick because of once all the cycles align again, government is spending more, and you're out of monsoons and so on. That is one part. The other one is that if you actually look at the data, you see that okay, some sectors have outperformed. They actually automobiles, banking, and pharma. These are the ones which have shown higher double-digit performance in terms of earnings growth. So then, what do these sectors really look like? And that is what becomes critical when we are doing valuation analysis. So that's interesting. We are going to do a combination of momentum and valuation. So first, I would go into valuation. We've already done a very detailed session on RMI. So what I will do here is do a slightly more quicker run through on the basics, so that everybody is in tune. Let's understand that RMI, like any momentum indicator. So I'll start by first sharing my presentation, couple of slides, then we look at it on strike itself. Okay, so this is what we are really talking about here. Okay, we are talking about the RMI first. Okay, so when we talk about the Rohit Momentum Indicator, which is what RMI in short is for, then what we are really referring to is a momentum indicator that is faster, quicker, and smoother than most of the ones that are plotted on standard technical software. And which is why, because the underlying methodology of calculation has been fixed by me to do that, so that it actually gives me those kind of results, which is why we use it, or I've been using it since I designed it in 1996. And then the last adjustment to the formula I did in 99 for further smoothing, and then from then till today it has remained the same. We have actually made no change. Okay, so that's a long enough time for something to be tested. Like I said, it works like any other momentum indicator. You get buy signals, less sell signals, you get divergences. Okay, so that's same like you get in an MACD, but slightly different from an RSI, because there are two categories of momentum indicators. One is those which are range bound, and those which have no particular range. So the range bound indicators essentially are those which have a movement between 0 and 100. Okay, so if I actually put it specifically, I'm going to just switch my screen. Should probably just do a entire screen share. That's easier to go to different pages. Okay, I hope you can see my screen. Okay, I'm drawing something on Paint, so you should be able to see it. So range bound indicators are something like this. They are within a broad range, which usually runs from 0 to 100, right? So you put 0 at the bottom, and that is how RSI is, right? RSI goes from 0 to 100. Stochastics go from 0 to 100. But then there are other. So these are the range bound indicators. Now, non-range bound indicators are interesting because, see, with RSI, it reaches above 70, we start saying overbought, but it can be overbought at 67, 70, 80, 90. But it can stay there above 70 for long periods of time in a bullish market. So when do we really take it as a sell signal? Should we wait for it to fall below 70 again? So where is the crossover? So that is what range bound indicators fail at doing, which is where so range bound indicators are interesting in knowing, okay, you got to an extreme, you got a divergence, but when you actually want buy sell signals, I prefer a non range bound indicator, closer to what the MACD does. So a non range bound indicator has two plot lines. Okay, so we plot two things. First is the indicator itself. So we can say the indicator is the green line. So this is the RMI. Let's say this is the math around the RMI. And then we plot a 9-day exponential moving average of the green line itself. Okay, and that goes behind the green line, something like this. And each time the green and red cross over each other at these points, we generate what are known as buy and sell signals. Okay, so at the bottom end, we end up getting a buy. At the top end, we end up getting a sell. Now, this is the simplistic version. The way I also like to think about momentum is that they are cycles. Okay, so I actually, call it a sine wave. That is what you saw on my screen. So why I call it a sine wave is it moves up and down, up and down, up and down cyclically. Okay, sometimes even within the same kind of time horizon, because there is a seasonal aspect to everything. Okay, the only thing is that in real life, once we have understood that there are cycles, they're not going to be as straightforward as the sine wave itself. There will be some variations. That is where you'll get divergences, you'll get extension, continuation of trend, and then we need to understand how that is done. Next, we need to also know which are the most important buy and sell signals. The most important buy and sell signals are those which come after completing a cycle. So what does completing a cycle really mean? Completing a cycle means that a sine wave goes up and then comes back down. Now, how much down should it come before I say completing a cycle? So we use the zero line, the central line which you see moving from here to here. The central line is the zero line, okay, which simply means that the momentum is zero. Zero means you're not going up, you're not going down. Okay, so when you come back to zero is when your cycle is complete. Okay, so even if prices are advancing, it's not necessary that prices crash every time. Okay, prices advance, then they correct. Okay, which means they consolidate for a while, then they advance again. So what happens during this phase? When prices are advancing on the way up, we get a buy signal, prices move up. Okay, and then when they are going through this consolidation, even though we are at a much higher price level, momentum can come back to zero, right? Because it is rate of change. You're saying a 20-day rate of change, and over 20 days, if it is still falling, the rate of change will come back to zero. So it will complete this cycle back to zero. And then when the next advance starts, you get another buy signal over here, right? So this is a repeated pattern that keeps happening, where you get buy and sell signals. Even though prices are going up higher and higher, you end up getting multiple buy and sell signals. But the most important buy and sell signals are those which occur after completing a cycle, which means after it comes back and touches zero. Now that doesn't mean that the next buy signal should occur below zero. Okay, it can also happen that, let us take a blank screen to explain this part of the concept. It can also happen that you have the zero line. Okay, you have the indicator, sorry, keep this black. You have the indicator falling to zero, touches it, and then goes back up. Now in this, the moving average of the indicator goes something like this. Now the most important part here was that you touch the zero line. Okay, touch. So is this a valid buy signal? The answer is yes, because once you've touched the zero line, this is a valid buy signal. If you have not touched the zero line and then you're getting a buy signal, then that is slightly less relevant, because it might be a continuation of the previous trend. You didn't complete the cycle, you didn't come back. Okay. So now to give you a visual example of that, what really ends up happening in real time is you get a buy signal. Okay, it goes up, but as it is coming down, it comes down like this. Okay, it does something like this. So in this scenario, the crossover is, it turns bullish, but you get a couple of down crossovers and it's like this. Okay, so you are only completing the cycle way ahead. Okay, way ahead, meaning let's stretch this line all the way till here. Okay, so you're completing the cycle only over here, coming back to zero. These signals become less relevant. They are noise, but they are not a confirmation of a trend reversal. Okay, so therefore, to get that additional confirmation, what we can use is, we can either use a trend line or a 20 DMA kind of moving average. That if you actually break an average along with the sell signal, that might be a little more powerful. So to do that, therefore, we put something known as a strike valuation setup in strike. So now I'll move to strike and tell you what the strike screen for RMI looks like. Okay, so here I'm presuming everybody knows what momentum indicators are like, how they are used. What I have shown you is the peculiarity of how using the momentum indicator that I have overlaid, so that you get better signals, better important signals, rather than looking at every buy sell swing. Okay, so how is that important? Look at it in this context. Okay, you have very different types of market over here. Okay, I'll take a slightly more up down market to give a better example, like say during this phase. Okay, or even this kind of phase. Now here, where you which is more typical, why I'm taking this phase is where you're getting typical buy sells. Okay, so here you get a buy. Okay, then you get a sell over here, then you get a buy over here, then you get a sell over here. So now this is the ideal market. When you're typically in a bear market, you get these ideal buy sell signals. Every signal just plays out immediately. Okay, so then you'll say, why do I really need to wait for it to break a trend line average or anything? It will immediately play out ho gaya. Okay, so even if I drew a trend line from this bottom to this top, okay, I could have taken this break along with the RMI as a combination to say, okay, now I have a confirmed trend reversal. So that is how we do it. Same here. If I'm getting a buy signal here, I'm also looking for, okay, am I getting a trend reversal? So I have to draw a trend line for this entire fall and then see, okay, it'll be something like this. So I get both a trend line breakout along with RMI, and that is good. The second form is to actually, in a slightly more extended, in a bullish market where you don't get up and down both moves. Up moves are strong and down moves are more sideways. In this phase, waiting for that. So sometimes I'll wait. I'll say, okay, wait for something else to break. So you get this sell signal. Okay, does it also break the moving average? Here it did. Okay, so when it does, okay, then this particular trend is over. Then we are looking for a fresh trend, and the fresh trend starts only after this indicator has gone back to zero, and then it gives you a buy signal. Okay, and so you get a buy crossover over here, and then is this buy crossover valid? So either you can do two things. You will say, okay, wait till this trend line breaks, or you can say that, okay, wait till it goes above this moving average over here. Okay, so once it crosses this level along with this, then it may be more accurate. Okay, now in a bullish market, the buy signals I might take more quickly, but the sell signals I definitely don't. And there's a particular reason, because markets tend to extend. So here is an example of an extension. This trend started from here and it went on all the way till here. Now, if I drew a trend line here also, it would have broken, but it did not break the moving average. Okay. Now, what is happening to the indicator? It's giving sell, then it's giving buy, then it's giving sell, it's giving buy, and it only comes back to the zero line over here. So till this point of time, all these buy sell signals are what we call as false signals, unless it is confirmed by a break of something additional. So here it didn't break the 20 day, 20 day, here it broke. So this is the actual confirmation of a trend reversal. And this is very useful because sometimes you get a very strong trend and it just goes on. Just take this particular part, say what started from March of 23 over here. So this is somewhat like the example I was drawing in paintbrush. Okay, where you have multiple buy sell signals going on, but you come back to the zero line only here. So the last sell signal here along with a break here would have helped you capture this entire trend if you simply held on to this, average, that it didn't break till here. If you paid attention to this sell signal, but you don't break the average over here, okay, then you would be out of the market on this sell signal. But if you wait for this average confirmation, then you can actually hold on for the entire move. So this is the basic point. So that is why when you come to any security, this is Nifty, you open any stock. Okay, so even if I open Infosys, I go to charts, the first thing we show you over here is the RMI setup. Okay, Rohit momentum indicator on the right hand side, and on the left hand side the values of everything, because sometimes we are not used to seeing the buy sell crossover. It's very narrow, you have to zoom in and check. You can simply look at it over here. Okay, this is a sell signal, this is a buy signal. So now you know what signal is going on. The second thing, the only thing which it doesn't tell you is whether the cycle is complete. That is a visual art. That is what you have to do, and that is why you are here in this session, so that you understand that you will have to wait for this cycle to be complete. There will be a buy sell signal here, there will be a buy sell signal here, there will be a couple of false signals. When those false signals are happening, you should be able to see whether the RMI came back to the bottom or not. So therefore, we've given you the levels also on the right. People who are not comfortable looking at a chart, want to look at numbers and take their decision, they look on the left hand side. Okay, you have the upper Bollinger Band, moving average, all the levels. So are you closing below the moving average or not? So you can actually look at the 20 DMA here and see whether the price is actually below it or not. Okay, and then based on the signal, when you get a sell signal, did the RMI actually go back to zero? So that's something you have to check on the chart itself. Okay. Along with this, we've also given you the Dow trend. Now, what is a Dow trend? Some people don't know what is Dow theory. Okay. Some people do, some don't. It's very classic. It's basic to technical analysis. It's the first thing that you get taught. So let me just give you an insight of Dow trend. Dow trend is something like this. It defines a trend. When you make higher highs and higher lows, it is a trend. So at what point do we recognize that the trend is up? So according to Dow theory, it says when you move up, you make a fast high, you drop, but you don't go to a new low. Okay, you start going up again. So this is where you've made the first higher low, and then you surpass the previous high. When you surpass the previous high, you've made the first higher high from here to here and higher low from here to here. This is what is defined as an uptrend. The same way, when you go down this, and moment you fall in below the next previous low, you have defined a downward trend. So this is a definition of a downtrend. This is a definition of a uptrend in Dow theory. So every time this happens, we can say that the trend has changed from down to up if it was falling before that, and it has changed from up to down if it was rising before that. Now we have sort of quantified that and made it into an indicator, which is showing you green and red based on classic Dow theory. So sometimes you'll find that the classic Dow theory and RMI also don't match. Like over here, you got a sell signal, but Dow theory doesn't confirm. You didn't make a lower low. So that's also a non-confirmation of trend. That you got a sell signal but not confirmed by Dow theory. Therefore, it's not a sell signal. And next day it went back to buy. So it was just a false signal that happened in between, like over here for just a day. You can even go past and see similar things. Okay, so when both of them confirm, it's slightly different. When one of them confirms, it's slightly different. So you can get variations like this is continuously in sell. Dow theory turned up, but again went into sell and continued along with the trend. So that's another combination you can actually look at. So after some time, you'll get used to it. It's pretty simple. We try to When you actually position sizing, you combine these two three things. Like position sizing means buying 1,000 shares, but 200 at a time is something I would do. Look at RMI, I'll look at the Dow theory, I will look at the moving average, and each one I can give a 20% weightage, and I can say, okay, accumulate a little more when it confirms. That's another approach which makes reduces your risk of loss significantly. So these are the things that you should use and understand. But the main thing here we wanted to get you used to is how to know the good and bad signals of RMI. Because when we will look that in combination valuations, then I'm able to take long-term calls. See, this is a daily chart. But when I'm doing long-term investing, I will look at a monthly chart of valuation. I will look at 10 and 20-year charts of valuation. And I will compare where is the momentum along with that. Because as you know, just like a RSI can be overbought for a prolonged period of time, a stock's valuation also can be overvalued for a prolonged period of time, and it can keep going up. So you don't want to get out in a hurry. You want to wait for the momentum also to reverse before you get out. And that is why the combination of momentum with valuation is very important. And so for that reason, we created a third setup here in the drop down. So there are three. When you come to the charts of any stock or any index, you will find there are three drop down over here. The first one is interactive chart. By default, it opens on Rohit Setup, which you just saw. But if some people want to open a blank chart and do their own analysis, they can go for interactive chart and use the trading view tools and indicators and plot them here. Okay, if you want to save it, you can save it as a template so that you can load that template, and same whatever you have drawn gets saved and you can come back to it tomorrow. Now, the third one is, of course, down here, the strike valuation setup, where what we have done is we've combined price, valuation, and RMI on the same screen so that you can actually look. And if you want to see a single thing, you want to zoom it up, just double click, you can look at the entire valuation. I can do click on Max, I can see Infosys's history. Right now, it's still 2012. We will be dating it back by the month end of this month. You will see it from 2002. So you'll see all the bull and bear markets of the last 20 years and how the valuations for any particular stock moved across valuation metrics, which is market cap by sales, PE ratio, price to book, EV by EBITDA, EV by sales, earnings yield, whatever you like. But there's something known as recommended. This recommended is based on the sector. So we spoke to analysts. They said these are the recommended sector valuations that you should use. Like, for example, in banking, price to book is more useful. In cyclicals, PE is more useful. And in the case of a services stock like this, market cap to sales was considered more useful. So it automatically plots what is considered as the recommended valuation, but you can change it to anything else. Like if you're in a loss-making company, then PE ratio will not show you anything. It will be a blank. So then you'll go to price to book. Those kind of adjustments you can easily make. So therefore, all the metrics are available for you to switch. And moment I click max, I got most, but say this is a month. So when we click max, it automatically gives you a monthly chart. But if you don't want a monthly chart, you want to see the daily valuation changes. And with max, you can simply change it to day and look at the entire valuation history. Okay, on a day chart. So now it will show you the same thing on a day with a daily plot. So you'll feel that yes, there's a lot of data. When we put it on monthly, it gives you on one data point per month, like end of the month. And so you feel that, okay, there is a small amount of data, but it's basically daily PE data that is getting plotted with price action. So now when you're looking at the stock chart of Infosys, what are you really seeing over here? There are four lines running from left to right. Okay. There's a midline also, which is there usually when we go to the valuation chart alone, which is under fundamentals. When you open the valuation chart, you will find one more line. But in this chart, because this is a trading view chart, we didn't put a mean in the center. Okay, mean is basically where it is fair value, or you can say zero. Okay, but what we have given you, which are the most important decision points. The decision points is when valuation reaches one standard deviation of the history, and when it reaches two standard deviations of the history. Same way at the bottom end when you reach one standard deviation and two standard deviations. Okay, because when stocks fall, sometimes they will get extremely undervalued and they will reach one or they will reach two standard deviations. So this is the range in which we want to consider buying. This is the range where we want to start considering selling. But as you see, valuations can continue higher. In some stocks, they even continue lower down. And that is where then the momentum setup comes into play. So when we double click, we can again get the whole momentum setup along with valuation. But now you'll see the momentum chart has changed because I've changed to a day chart. If I'm a long-term investor, which is why I'm looking at valuation charts, typically I want to see momentum on a higher time frame. But there are some people who are traders, which is why what we have done is we've given multiple time horizons. So if I click on 1 year, what ends up happening is that we are plotting the standard deviation based on 1 year of data. So even the deviation ranges change. Okay, they don't remain the same as they were on the max chart. So for those who are traders, when we click on 1 year, it uses the daily time configuration. It takes 1 year of data and then plots standard deviations of the last 1 year of data only. So it gives you a very different setup in terms of where you're overvalued or undervalued, because it's based on 1 year of standard deviation. Okay, when I go to 3 years, it automatically changes this to weekly, because now you're considering that maybe you're a positional trader. You're not somebody who's going to buy and sell every 1 or 2 or 3 months. You're going to hold on for several months before you get in and get out. And therefore, for that person, the weekly setup shows up. So accordingly, the RMI also adjusted to weekly. Okay. So when it is adjusted to weekly, each weekly cycle is slightly longer. So when you see this cycle, this buy signal occurs here. Okay, it goes up and then gives a sell signal somewhere here, because here it didn't come back to zero. So the sell signal is here, and then after that, this move is complete. Then you got a sharp correction. Then you got another buy signal over here, which is now going on. So this thing can go on for several months. This buy signal is come in June. Now we are already in July, August. We may go on till September, October, who knows? Because nothing really changes for months. Like this one started in June of 23 and ended in Feb of 24. Okay, so that's like almost 6 months. So when you're looking at a weekly cycle, it can be slightly longer, sometimes 6 months, sometimes lesser, slightly more, slightly. But you know that you have got the point that it can't be 1 month. For that, you'll end up going to the daily time frame. Now, if you're an even longer time investor, then you'll go to 5 or 10 year charts. I typically go to max. Okay, so I just take the entire data. If I'm thinking long term, max gives me the monthly setup. So I'm looking at the monthly RMI now. Okay, so when I'm looking at the monthly RMI, what I'm really doing is looking for monthly cycles that can last for many, many years. So I get a buy signal here. This went on all the way for 2 years. It was rallying post COVID. Okay, and then you got a sell signal here. Now you're getting another buy signal from this point onward. Initially, it was slow. There's a slight whipsaw here. I don't know whether it gave a sell. Most probably it didn't, I think, because see, the reading is 2.43, 2.49. No, green is above the red both times. So it didn't give a sell over here. There was no crossover, even though there was a sharp correction. And also Dow theory wise, which means this previous low did not break. So even Dow trend is bullish and even RMI is bullish. Okay, and valuations, they had fallen below the midpoint, which is the mean. They didn't reach -1 standard deviation. So typically I would like -1 in a sharp correction, but it's not always you'll get it. But if you're in a larger uptrend, on every correction you may at least come back to mean. Okay, so even if you come back to mean and a fresh RMI buy signal develops, then it is a fresh entry. So now for a long term investor, this is a decision point. Should I really trade this cycle or not? Okay, and we can sort of filter that out with an average, right? So I can always put in, if I want a moving average, okay, I can put in a time frame depending on how long I really want to hold. So if I want to get in, get out within this cycle, I can use a 20 period average, which will also break over here, giving me a sell signal along with RMI. Or if I want to hold on still longer, I say that no, I don't want to get out in these smaller corrections. I want it longer. I can actually go and use a 40 or 50 month average, right? So I can switch this to a higher time frame. So if I put 50, it may or may not have broken. See, it didn't break here, just touched and went. Okay, so that's a choice that you don't want to give importance to this cycle unless it really breaks the 50 period average, which on a daily time frame is equal to the 200-day average, right? 200-day is sort of equivalent to a 40-50 week period. So the only thing is that we are looking at this, and in this case this is a monthly chart, so this is not a 200-day also. It's actually going to be higher because this is a 50-month average. So we are taking a very high time frame average to filter that out in case you want to continue to hold. But note, if you see history, there are times where this breaks and then it comes back above that. So when it comes back above that, gives you a fresh buy signal. There is always an entry point. So what I think is, I actually like the 20 period average. See, each one can choose a different period. If you're an active manager, okay, versus a passive, if you really want to continue holding through these cycles, then you'll go to a still higher. You might want to go to a quarterly time period. You want to use a 100-day moving average, something like that. So that is completely different. But in this scenario, as an active manager, say if I want to move my portfolio into performing, outperforming, underperforming stocks, I'll probably use a 50-week kind of filter on a weekly chart, because every time it goes into that for 6 months, that stock will underperform. And the ones which are performing, I hold on to, or I find other stocks which are performing. So now that is more for an active management strategy. But if you're not into active management, you are someone who will hold on for a couple of years, then you'll probably stick to monthly charts and longer term averages. Okay. In fact, like I say, you can even use trend lines. If you use a trend line, it may just not break. If I draw this over here, just draw one trend line long term. Till it is broken, I don't want to be bothered. Sure, I can do that. Okay. So then I live through these cycles, but it just creates awareness for me that, yeah, here you got overvalued, you got a corrective phase. The right time for re-entry. So even some people who are holding on, they don't want to, they're not interested in exit. They're interested in next entry kab lena hai. So next entry tab lena hai when something is undervalued, not when it is up here. So today there are a lot of stocks where the green is right on top, above 2 standard deviations. So even if you're holding on to those stocks, you don't want to get out. But when will you buy fresh? You will buy fresh when their cycles come down. Okay. Now, just like in technical indicators, you do get divergences also in the valuation setup, and that gives you very, very interesting outcomes, right? What is a divergence? A divergence is something like this. In price, when we say divergence, we say something like this: key price is making higher highs, but the momentum indicator is making lower lows. And once it does that, eventually at some point of time, it will break the average, go into a full correction, and complete the cycle, and then a new cycle will start. So this is what we call as a classic negative divergence in price. Okay, but what is a negative divergence or positive divergence in valuation? So if we apply the same concept to a valuation chart, okay, and so I can do that by simply closing out. Let's say we ignore momentum. I don't want momentum. You want only to look at valuation and price. You can do that. Okay, there are people who want to only, who are very long term investors, don't want to bother about momentum, entry, exit. You only look at valuation cycles. They'll give you very good entry points. So now I'm going to show you some interesting ones which I found. Okay, and which will give you an example of it also. So these are more recent, therefore the example is more current. And since it's current, I will highlight we are not investment advisors, so we do not really advise you buy it or sell it. What I'm trying to show you is what you should be looking for. Okay, and does it happen? So I'm taking a max chart now of Maruti Suzuki on the valuation side. Now, what does this look like? Okay. Now this looks like valuations went up on EV by EBITDA to the top end, and then they've been falling ever since, falling, falling, falling. Now, if you look only at the valuation chart, you will feel, हाँ इधर ऊपर था, अभी इधर नीचे, means prices have come down. Right? The stock must have fallen during this time period. Therefore, it has come down. If I look at the P ratio, it's even gone below the midpoint. If I look at price to book, it's somewhere at the, so all of it is close to or plus or minus the midpoint. Okay. So for some reason, prices have fallen. Correct? Stock price has gone down. Correct? Or no? So now let's look at the valuation setup and understand the same thing. Now what does it look like? Does it look like prices are falling or only valuation? So this is what we call as a divergence. Okay, now this is what you are looking at, a valuation divergence. Okay, so I'm just showing it to you that what happens, and this is because of what the market is today. Today the markets are highly rotational. We've all heard this word, rotation हो रहा है. आज ये चल रहा है, आज वो नहीं चल रहा है. You know, so that way we all get caught. So PSU stocks are going up, but banking stocks are not playing out. Pharma is going up and FMCG is going up, but कुछ और नहीं चल रहा है. So same thing has happened somewhere here. Maruti stock is going up, but its valuations are down. Which means what? Which means that it is growing. Earnings growth are very good. But market doesn't care. So market is not giving it peak valuation because money is going somewhere, liquidity is going somewhere else. Now you can say that will the market give it? You can also argue that maybe the market thinks growth is going to slow down, and therefore this could be a bearish divergence. It's a fair argument to have. One way to filter that out is you have data, right? You can simply go to the fundamentals and look at whether earnings are growing over the last 4 quarters or not, and you can look at it visually with charts. So instead of revenue, I can go and look at PAT grow हो रहा है कि नहीं. यहाँ पे ग्रो तो हुआ, यहाँ पे भी हुआ, फिर यहाँ वापस ऊपर थोड़ा ऊपर नीचे होके इधर है. So it's not like degrowing kind of thing. It's not that profits have fallen. So the reason as profits went up here, okay, valuations came down. So prices have not caught up with profit growth. Now you can argue whether this profit is going to fall. That is why market is, or else the market is undervaluing. So that is the catch. So that then we combine with what does momentum tell us. That is why we have the valuation setup, right? So now in this, when I look at price momentum, what is happening? The whipsaws. We've already spoken about it. Buy, sell, buy, sell. It is going on like this. Prices are rising, and prices are rising, holding on to probably the 20-week or so average. If I just put Bollinger Bands, you can see the mid line. This yellow line is the 20-week, which is holding on and going on. So basically, it's trending. Okay, it's not breaking the average. If you don't like Bollinger Bands, you feel they confuse you, you can just choose. See, you notice I've put stars over here. You can put any indicator starred so that it's always on top. The most common indicators you use as favorites can be kept over here. So that's another insight for those of you who are using this or don't know how to use it. It's similar like Trading View because it is the Trading View backend. And so I can choose moving average. The only thing is it will give you standard 9 EMA because that is the standard setting. So you have to change it, okay, manually. So now, because I recently used it at 40, it is plotted 40. But first time you open it may be set at 9. Okay, so now that it is actually trailing below price action. This is a different EMA. Achha, this one I have plotted. I'm thinking what is wrong. So actually I can make this visual, yeah, and hide this one. Okay. So now this is a 40, but we can even adjust it to 20. Let me see. I think even 20 may, yeah, 20 like the Bollinger Band didn't break here. It's holding on. So essentially the main point is that it is trending. It is not giving you a trend reversal, even though the RMI is whipsawed over here. Though these sell signals have not broken anything. And even if you think in terms of Dow theory, higher bottom, higher bottom, higher bottom, higher bottom, higher bottom. So it's just making higher bottoms. So price is in an uptrend. Okay. It's just that the uptrend has not been faster than earnings growth. So to me, when I look at this, I think, oh, it's a bullish divergence because prices are rising and they are not catching up with growth. So unless growth slows down, prices are due to catch up with growth, right? They can move up and go to the top end of valuations if asset managers decide to shift their asset allocation away from some overvalued sectors to undervalued sectors. So that is how you really look for it. Now the next thing is you'll ask you, okay, how do I really find this? So by this month end, you are going to be having scanners out which will allow you to find stocks which are at minus one standard deviation and two. So we'll do a separate webinar to show you how that works, which means simply you'll be able to find all the stocks which are undervalued, which is exactly what you want to do. Right now what I'm showing you is how you can open a particular chart of your interest and find these patterns. So this is one example. Last week, in fact, I wrote about IndusInd Bank on something similar, where the valuation chart. So this is banking, right? Two of the sectors which I found interesting, where valuations have came down significantly over the last 2 years, were banking and pharma, and many of the secondary pharma stocks. If you go to a biotech and all, they too had gone down a lot. So then you open this chart and you see where is it on price to book. Typically, what you see for in a banking stock, or if you want to see P ratio, if it has no losses, then you will see P ratio. Where are we? We are well below -1, and we are going closer to -2, which is similar to COVID valuations down here, right? So it's coming down here. But is price also that bad? So you go and look at the price chart in combination with the valuation chart, and you see something different. So I'm going to remove the RMI just to look at the combination of price and volume. Price and valuation, sorry, not volume. Okay, so down here, this was the valuation. Price is up here, and again the valuation is here. It means the same thing what we just saw on Maruti. And like I mentioned right at the beginning, some 25% or 27% earnings growth for banking sector. The sector is growing, okay, but prices are not running away. For some reason, one of the reasons given is that, oh, there was over ownership by FIs, and FIs, whenever they are selling, they're selling more financials, and that is why financials are under pressure and other stocks are doing well. This is one of the logic we've been hearing for last 3 years since COVID, for banking. Every time banking underperforms, we are told that FI over ownership is the reason. Now, whatever may be the reason, whatever is the reason, the market for some reason ignores something, and then we pay attention to it. That is the whole point, right? So this is across most of the private banks. You will see these kind of charts, whether it's this Kotak, HDFC. But if you open ICICI, you might not. Okay. Now you can do the same thing on the banking sector. So let me just see, because I've also not seen what is the strike valuation showing on ICICI Bank. Okay, on a 1 year basis, it is below the mean. But if I took a max basis, it is slightly higher. Now, this is because it's been an outperformer compared to the other banks. Okay, some bank has done well, so this one has actually gotten more attention. Valuation has recently fallen below the red line. Okay, but I'm sure that has not been the way price is moving. It has not been confirmed by my indicator. So the 40 EMA over here is not confirming, or the 20 also is not broken, the yellow line. So both are holding on, even though the RMI gave this sell and now it has given this buy again from here to here. This did not break. Okay, this did not break. It did not confirm a sell. So it's a trend continuation. So when you get a sell signal in the RMI, but you don't break an average, it's a trend continuation. And this has just been continuing. Even though it has fallen from higher valuation, here it is in continuation. So it may be just a pullback correction and then again things continue. That is what it is right now till it actually reverses. Now, if we look at banking, Bank Nifty itself, standalone, open the valuation of any index. We have all the indices valuations, which have a little more history, all the way here till 2006, right? So on the price to earnings ratio, where are we on banking sector? Here we were at -1. Here we are somewhere below, down there. Okay, so somewhere getting close to the -1 range. If we go look at it on price to book, sometimes it can be even lower or higher. Okay, so PE and PBV can be slightly different. So in PBV terms, we have moved up a little bit, but we haven't really gone to 2x at the top. So you can broadly say it has been consolidating over here, sideways. Okay, but this sideways consolidation is even as earnings are growing. That is the interesting part, I think, about this. So if you actually look at an EPS chart, look at this now to get a better understanding. I'm not just saying earnings are growing. From 2019 onwards, the earnings path is upwards. Here it was upwards here, but it was more flattish, right? See, we have a scroll bar at the bottom if you want to really zoom into one part, yeah, but it keeps the height same. It doesn't adjust the height of the range based on how much data is on the screen. That's something we can work on. But if we can actually, look at that particular time period, okay, here also there was earnings growth, but the pace, probably the pace now is much higher, and this high growth is not translating into higher valuation, which is probably why your PE ratio chart is actually coming off. Price to book is not coming off, okay, but pre PE is coming off. So again, here there is a situation where for a long period you have ignored a certain sector because money is gone somewhere else and whatever other reason. But the valuations are bottom end, right? So something like that. I had published an article on pharma stocks in on Twitter and on India Charts, and that was actually looking at uh, looking at various companies that have gone through this cycle. you know so I had very broadly in terms of waves thought of this as 1, 2, 3, 4, and at the end of a fourth wave my valuation here is back to where it was at wave 2, right? So what I had here in wave 2, now I have here in wave 4. So which is very very interesting, right? Because of the time taken, and whatever the reason may be, earnings growth, and there's been a sharp retracement in price also, that has brought valuations back to minus less than -1 standard deviation. So once you're down to less than -1 standard deviation, should you wait for -2 standard deviation? The answer is I wait for a RMI buy signal, and if I'm still not completely convinced, I wait for a moving average break. So if I actually put this on top, either the 40 or even better, I put the 20. Where do I get the cross? Over here. So those are 2 points here and here. Now you can even consider this as what I said in the beginning, position sizing. Okay, it's not necessary that okay, unless both will confirm, I'll buy everything, or shall I buy 20% now or 10% now, and then when I get a price confirmation, or if it dips further, and then I get another buy signal, I can add 10% more, and then if I get a dual confirmation, I will add 20% more. How about that? So that gives a much better strategy of position sizing, because we cannot say perfectly bottom, But we can say that, okay, now we've reached here. This is the time at which I start my accumulation strategy, and then I continue with it. So you can have various different angles when it comes to strategy. Okay, but these are the tools. We have put it right in front of you, and so that you can strategize using these tools. You are not going to need anything more than this to strategize. You have the valuation, you have the price, you have the momentum, right? You have Dow theory, you have a moving average. उससे ज़्यादा क्या चाहिए? You don't need more than 4 or 5 indicators to do all your investment trading or whatever it is. You know, it's just about how you use it. Whether you use it systematically in a disciplined way, it works for you. So this is how a lot of the pharma looked. Some are more extreme like this. Some of them are less extreme. But this is where the entire pharma rally started. So now when you are looking at pharma, you're seeing it more broad based this year than it was post COVID. Now post COVID, the pharma index gave up after one point of time. Some of the individual stocks fell a lot also, and some continued to hold on. Now you're seeing a broad based pharma rally. Every pharma stock is picking up, even those which were beaten down, which is why I opened Biocon. This was one of the beaten down ones. Say Lupin was a beaten down one. Others were not so beaten down. So each case was different. Dr. Reddy got more beaten down than a Cipla, for example. And they all went through this kind of a routine. So we actually open. Yeah. So it will be so once we add these scans to valuation, you will find it even more easier to be able to see these kind of things. So you see here, this is of course COVID, and now this is the recent correction. It's not that sharp, but for a long period of time from here, from October 2020, all the way till somewhere in 23, for 2 years, it was doing nothing. Price was doing nothing. The post COVID buying just died, money went elsewhere, and the valuation came off, and now it is picked up again, and now you're not back at two standard deviations where you have reached twice before. So at least this has happened here, this has happened here. You're not there yet. And now when you'll have more data, you'll have perspective of yahan pe bhi kya hua, all the way back till 2002. You're going to have that soon, and that will give you a lot more perspective. So I think we've taken around 45 minutes giving you an idea of different examples, different setups, which are interesting.
Rohit, there is one important question which I
Yes.
felt you should take up.
Tell me.
Uh, it is from Ajay Prabhu. He's asking the valuation basis is different for different stocks. How to interpret? It's an interesting question because he's asking the recommended parameters what we have displayed over there.
Yeah, so
Yeah,
what we
in
have
the
done is
chat.
we've displayed where it is relevant, say in pharma and all. Sometimes it is relevant to look at things like market cap to sales, or in service sector we look at those kind of metrics. So moment you come here, see it shows market cap to sales in any pharma stock on top, and P ratio. If you're looking at banking, it will show you price to book, but it also gives you options of NII and those other ratios. So I didn't show those, but if you actually come here, you see NII plus other income is at the bottom line of market cap. So we change the formula based on what typically analysts look at, and most people don't know what to look at or how to look at it in terms of the industry specific valuation metric. Okay, so that has already been given here. Uh, Sometimes it's also involves some amount of switching, because what happens, like let me take another example. What happens is some companies go into loss. Now you may be looking at a PE ratio, okay, and then if you look at PE ratio, you will end up with a chart which has a lot of blanks on it. Okay, and see here now, for example, between 2020 and 2022, earnings went negative because of COVID or whatever reason, and there's no PE ratio. So now when you're looking at this chart, you'll think, okay, how do I compare? यहाँ पे data नहीं है, यहाँ पे नहीं है. So we have sort of removed the PE ratio wherever it goes into loss. Otherwise, the numbers get skewed over 100, below 100. So in these cases, the preferred metric becomes either it'll be price to book or EV by EBITDA. Okay, EV by EBITDA will also work if you're pre, depreciation, interest, and earnings. That tax angle is still positive. You're still making money. If on that also you're not, then this also may not work. Then you'll have to go to price to book. So you can make that switch, and that is interesting and important because we have all metrics that you can compare which one to really give importance to. Sometimes P can be high, but price to book is not. So it may not be overvalued from all angles. The P angle may be only because the market is anticipating future growth. So high P ratio is basically, think of valuations as a sentiment indicator only. Just like we have sentiment indicators like put call ratio and all, those are more for short term. When I look at a valuation chart, I think it is a sentiment for the long term, because P can be low, P can be high. It is a perception of the earnings. We are perceiving that earnings will grow, we are perceiving that earnings will be slow. Based on that, we are giving a very high P or a very low P. So it is our perception. So accordingly, we have to use it that if perception is very low, which means everybody is bearish, I want to be bullish, and vice versa. And so I want to use P ratio or price to book, or market cap to sales, in that combination to judge that. So today, when a lot of stocks are getting overvalued on P ratios, people are looking at market cap to sales because they are starting to valuing companies based on revenue, and that is working better because then that is not going so overvalued as P ratio. So these are switches, and these switches you can easily make over here. Some things are sector specific. Like I said, in banking, price to book is considered a more important ratio than PE. Okay, so you can look at both. Similarly, there's something which is specific to metals. So let me show you Jindal steel chart. Okay, in metal companies, what happens because of the cyclical nature? Okay, they are called cyclicals, right? So cyclicals because there's a business cycle and then there's a commodity cycle interplay. So usually when commodity prices fall, the profits of these companies also fall, and the demand is also falling. So they end up building a lot of capacity. So क्या होता है इनका कि when that happens, because you have a capacity and there's something known as replacement cost of any company, prices of the stock cannot fall below replacement cost too far. Okay, so when they fall a lot, we consider it fairly valued. Ki it's discount to book, it's near replacement cost. So price doesn't fall, it becomes a value. But PE ratio becomes very high. Reason is that company is showing loss. It is showing loss because the demand has fallen and cost of infrastructure is very high in cyclicals. Okay, so now that I've given you some theory, let us look at the valuation chart. And we'll look at it along with price, then only it will make sense. Okay, so I'll remove momentum. We'll just look at valuation and price. Okay, and when you're looking at this, you'll see what I'm trying to say, that when a stock like this has gone through a deep correction, something like this, all this period, okay, when it is down here, bottom end, horrible, stock has fallen from 800 all the way down to 40 rupees, like that's a 70-80% deterioration. The P ratio goes up. So typically for companies that are in the metal, commodity, cyclical sectors, their valuations tend to be very high at the bottom, and similarly they also tend to be very low at the top. Okay, now for that reason, there was a comment, in fact, by Shankar Sharma at one point. When it reached here, he said, I'm out of metal stocks because valuation is low and cycle khatam ho gaya. But the only difference there is I had a view that the commodity cycle and the dollar bear market are multi-year trends, and they don't just end in 1 year. Itna bada 10 saal ke baad bottom bana hai, it will not end. So this was only a one cyclical top. This low valuation was one cyclical top. Now what is happening in the interim period is valuation is again moving up. The reason is that the commodity cycle is not yet picked up. Commodity prices are poor. Demand is still not very bad because economy has improved everywhere. Growth is there. So therefore, prices are going up, but now you're not seeing valuations fall. Okay, but at some point of time, if the commodity cycle picks up and earnings growth happens, you will find that these prices, when they are at a much higher level, okay, eventually at the end of the cycle, this valuation will have dropped. It We don't have the past data here, otherwise you could have seen it. Once that data comes in, you'll probably see how that happened. So somewhere between this and this, the last phase, you will see a valuation divergence where prices are going up and valuation is going down, and then the cycle peaks out because demand also dies. So we have not reached that point yet, but the reverse of that we have seen now at the bottom, where because demand cycle was so poor, earnings are poor, and therefore valuations have crashed. Okay, sorry, valuations have gone up, not crashed. Initially gone up because things are very, very bad, even though prices are falling. So this is something very peculiar to this sector. Okay, So you can probably, even if you pick up Hindalco, you might see something similar. Okay, here because there's a P gap, so we'll take market cap to sales. Or EV by EBITDA will work better. Okay. So yeah, the peak in valuations for a Hindalco, it's still high down here. You know, down here it is still high. Now this one may have had a different, so there can be variations. Has had a different cycle between, because this is the bottom. Somewhere it did its first and second wave and valuations actually came off, and now from there it's actually moving higher. Here also you see valuations are coming down at the peak, but we are not at that. We are not at the other end yet. But yeah, this is a peculiarity to be remembered for this particular sector. Any more questions, Chavan? Most of my presentation is done, so we should take questions.
Okay, fine. I'm also okay. So, Rohit, what is the simple rule for exiting when I buy? I mean, I'm going to buy when it reaches either the minus standard one deviation or the minus two, and then RMI comes into buy. Correct.
Yeah.
So, what will be the exit for this?
So I've explained the exit. It's the combination of RMI with a moving average. I've given that combination, uh, and that also after you have reached above one or two standard deviations of valuation. Right before that, you don't want to exit in any case.
Hmm. Okay. So can you just take a couple of examples of any ITC stock and explain when to buy, when are you going to buy, and when are you going to
So
exit
right
based
now,
on the
because
chart?
it's a bull market, we might not get current sell signals. I mean, we can look at previous cycles. So
Yeah,
I have
that's
given a couple of examples. I think the people asking have probably joined late. Like for example, here you have a sell signal. If I overlay on top of this, let me just add only an average and set it to 20. Okay. So when this is breaking somewhere over here, this is a combined signal to sell. Okay, this and this,
mm,
till the point where the next buy signal occurs. Okay, which is where this happens, and then after that you're crossing up here, or you're crossing up here again. So
mm,
this is a period where, now in this case it went sideways. Now there are certain cases where you will break and this will go all the way down. So each case is of course different. The extent of decline is not known. You get a period of underperformance. That's what we will say. Whether that underperformance ends up in a sideways market or a downward market is different. Because you're in a
mm,
bull market right now, there may be sideways, but in a bear market, it may be down. And some stocks even go through down during a bull market, as we saw in some of the pharma stocks. So, so how much importance you'll give to the signal is what you have to decide. But it's a combination of the RMI with this, or with a trend line. If at all somebody is comfortable, draws a trend line, says, okay, trend line broke. After that, RMI broke. Then you can use that also. You may sometimes get an early signal with trend line. Sometimes you get an early signal with a moving average. But there must be a combination of at least two things, RMI plus something, to give you that confirmation that you have reversed. And on the other hand, that valuation should be high. So in this scenario here, at least on EV by EBITDA, the valuation was not very high. Okay, if I go by price to book, probably it was.
okay. So can you take one stock example of ITC, Rohit, where how to do the average up strategy in the sense pyramiding. If I don't want to buy everything at once, say like for a, you can put a max charts. Yeah. Yeah. Can you explain I'll be able to buy one by one, averaging it out or pyramiding it out.
So first of all, what I explained in the beginning is we wait for, now here there is a sell signal, there's buy sell. We wait for it to go below zero. Okay.
Mm.
And say the cycle is complete. After that, we give importance to the next buy signal, which has happened here. It has happened along with a low valuation. So we like this also. Okay. The next thing we wait for is, okay, does it cross the average? So then we put the average, converting it to 20 period average. And I can have some kind of a trend line here. Okay, so I can have couple of, I can put a 10-20% weightage. Okay, if I want to buy over here, sure, buy 10%. Okay, now when I get a confirmation that it is trying to cross the average, I may add another 10. Okay, if it is taking support on the average again, I may add another 20.
Mm.
That is sort of how it will. Now if I say 10, 10, 20, people will say 100 to hua hi nahi. So now this comes,
Mm.
it comes down to a lot of individual calibration, because each person's portfolio and investment is different. You may you may do 20 here, and then you may do rest of it over here, another 20 years. So you reach 40. And then after some time back here you do the rest once you have a confirmed trend. Now if you have a better risk appetite, you may even do more earlier or later. So it comes down to, as long as you're in this, see, all of this has happened in a low valuation range from year to year. So this whole phase is your accumulation phase, where you're taking, different indicators to buy and sell. There's a Dow theory happening, so you can add that. When this surpasses the previous high or surpasses this previous high, use those as additional points to add another 10% or 20%.
Yeah. And in fact, Rohit, yesterday night we have gone live with peer comparison. Now, what you can do is you can do the same thing and compare it with the peers also. There is a peer comparison table over here on the right hand side. If you see, yeah, upper, next to bulletin board, Rohit.
Uh,
Okay, futures options, no, yeah, peer comparison. And now, okay, just click on the technicals. I'll just show you. Whoever is here, you can also create a custom peer comparison. Yeah, just click on that. Yeah, just give one something, some name, Rohit. Yeah, okay. So now this is your custom, this one. Now you have to add the valuation, this one. So go to fundamentals, go to fundamentals, go to valuation placements. Yeah. So now just take the max here. Just take the max. Upper. Yeah. Now you add P and say like price to book value or something. Yeah. Here. Yes. Okay. And then apply. Okay. Now you come to technicals. Okay. You will come to know where is the placement. Is it between plus 1 SD or 2 SD? And now similarly, what you can do is just go to indicators, Rohit. Just go to indicators. No, just yeah. Okay. Now come down and go to RMI. Yes. So now you can add weekly and monthly if you want to, or yes, perfect. And then this will get saved. You don't need to do every time. It will get automatically saved. So this is your custom pair, Rohit. So like this, you can create 100 peer comparisons. Okay. Now what you can do is you can compare within that peers as to where the placement is, what is the RMI is, where the 20-week moving average is. Right. Yeah.
yeah.
Anyways, so this is one functionality what we have built. It is called as peer comparison. It's a combination not only for fundamental but also technical price. You can create your own custom peer. You can try it out. Yesterday night we have gone live. We didn't announce yet, but we'll make a video as to how to use it. You can try it out. Anyways, is there any other questions? Come on, guys, you will have to come up. We have 1,000 people attending here, so I'm not able to see much of questions. You can put it in the comment section. Okay, Rohit, what else you use in strike? Now that people are not asking much questions, what is the most thing you use in strike?
My most used everyday thing is sentiment indicators and valuation charts, because I'm doing two different things, right? On the trade side, I always want to know whether the market is at a top, bottom, what is going on, sentiment
Hmm.
indicators. And then I'm looking for stocks which are worthy. Whenever a new stock somebody throws at me, ये क्या लगता है? Because the moment I say I'm bullish, then there are five people who have their own stocks to throw and bounce. And I'm continuously looking at whether they fit the valuation model longer term. Is there something new happening, especially stocks that are breaking out to 52-week highs from 10-year ranges? Are they really doing so? Do they fit the value wave model? So that is so yeah, I think those are two things which I use the most.
Okay. Okay. So should RRG be used in combination with RMI? Within RRG is basically used like a scanner, and RMI also used as a scanner plus execution also. So RRG will definitely help you in finding the right sectors, and RMI will definitely help you in finding the right stocks. That is how you
So there's an
can take it.
additional input on RRG. See, RRG, when you see, people think, okay, it's just that RMI is my momentum indicator. When you look at the right hand side, it says JDK RS momentum. In the bottom end, it says JDK RS ratio. So what is the RS ratio? It is the relative strength compared to an index. So if you are comparing it with Nifty, it is the relative strength of the sector index or whatever we have plotted on the screen with the index. On the right hand side is RS momentum. It is a relative strength of the momentum. Okay, ratio is what? Ratio is between two stocks. When you divide, it's a ratio. When what is a momentum? It is momentum, right? RMI is also momentum. He's used his own momentum indicator. So momentum is built into this. Okay, it's just that RMI is a different momentum indicator. So when you're looking at RRG, you're already looking at a combination of relative strength and momentum. That is how these quadrants are built. So when you're at the right hand top of this quadrant, you're essentially saying that both the momentum and relative performance are high.
Hmm. Okay. Rohit, there is a question like, can you please take an example of multi-time frame for LTF, monthly plus weekly or something, for the same valuation charts? Or is it like, you know, yeah,
I didn't fully understand the question.
multi-time, can we do some multi-time frame analysis on the valuation parameters?
So see,
So
the
in the
only
sense like
multi-time
weekly, monthly. Hmm.
see, the valuation chart will remain the same whether I do weekly, monthly. I showed that in the beginning for Infosys. The only thing is whether I plot the valuation at the end of the month, or whether I plot the valuation at the end of the day. So if I change this to a day and it is still on max, and I change it to a day, it is going to be the same chart, except that it is going to plot the daily values. So it will just have a lot of these zigzag movements on the chart more than it does otherwise. That's about all that will happen. Okay, so this chart actually doesn't have history. Let me go to ITC only. Yeah, so if I go from monthly to daily, I'm looking at the same ITC valuation chart with more granular data. The only difference here is the momentum cycle. The RMI is changing from daily to weekly to monthly. The valuation chart is no change. So by changing the time frame, I'm not doing anything to valuation. It is going to remain the same. By changing the time frame, all I'm doing is I'm changing the RMI that I look at, daily, weekly, monthly. Acha. By changing the time frame from top over here, I do make a difference to whether I'm measuring the standard deviations based on 1 year data, 2 year data, or 10 year data. So these red and green lines definitely change. Okay, their levels change, because on 5 years I'm looking at 5 year data and then finding the 5 year standard deviation. And when I do 1 year, then I'm looking at 1 year data and finding the 1 year standard deviation. So therefore the time frame is smaller, and in that sense it is possible that on the daily, on the 1 year data, you might find stock is overvalued, and on a 10-year data, you might find it is undervalued. So can I use a combination of these two to trade? I have not thought about it. To me, if you're trading 1 year data, then you're trading 1 year data. Okay, so from a valuation perspective, multi-time frame, I don't know. From an RMI perspective, of course, we do multi-time frame, but there what we say is if the larger trend is up, then on the smaller degree we trade the trend on the larger degree. That is what we do in RMI. But here we are talking of valuations, which is not the same, right? I cannot say higher time frame valuations are high, so lower time frame pay I will not buy. That's not, but if you want to be an active manager, you want to sell on every high valuation on the daily, the logic will come back to the same ki, acha, okay, long term valuation is low but short term valuation is high, should I sell? Well, if you are capable of managing an exit and a re-entry using this RMI sell signal over here, the same way like we do on a monthly, we'll do it on the daily. कि daily में मैं इधर exit करूंगा, फिर मैं उसको वापस buy करूंगा. If you're capable of that kind of entry exit, because a long-term investor, I mean, yesterday only I had a couple of hours meeting with an investor, is not someone who's going to be looking at every day at the charts and every moment. You might not even have the time. Then should you be doing this? So unless you are full time there to have the time to do this, and you have the discipline कि हाँ मैंने अगर बेचा and that sell signal goes wrong and I have to buy it back 20 rupees higher, I will do that. Then only you get into doing this short term active management. But short term active management doesn't always help. So for if you're trading valuations, you trade one time frame only. Right now, that is how I think. I'm not able to think how I would trade multi time frame valuations.
Okay. Rohit, what if the RMI indicator on the monthly is on sell and on the weekly is on buy? What will be your strategy? New buy, in the sense like it comes into new buy in the weekly, but
Hmm.
RMI is in still in sell mode.
So if I'm
So
short, I
what is
will
it?
cover my shorts,
Hmm.
but I will not buy anything because the
Okay.
larger time frame is down. So then I will not buy. And if I
Hmm.
do want to trade a counter trend bounce, कि चलो larger is sell, but short term में buy आया है तो ऊपर तो आएगा ना. Bear market rallies are pretty sharp, agreed. But my quantity will be between 30 to 50% of the normal quantity that I would do on the short side. Usually 30. I would not go to 50 also, because the chances of false signals is also there in a bear market. So I will not do a large quantity for counter trend bounces.
Okay. Mehul Desai is asking, can we have an alert functionality? Yes, definitely, Mehul. We are building the alerts functionality. Thoda time lagega, but we are working on the alert functionality. Okay. How can we use sentiment indicators for swing trading? All right. It's a big topic. Again, we'll do as we have already done enough webinars. Fazal, you can go to the help section. Uh, just go to the help section, Rohit, and just go through.
No, so for swing, I'll tell you, for swing, it's very simple. For swing trading, just learn how to use this swing indicator. We've made your life
Hmm.
very easy. Momentum swing is the only indicator I'll go to. Okay. At the most, if you want to add multiple indicators, add the average swing. If you think you're comfortable with more indicators, uh, then add the open interest. These are three short-term indicators, and by swing I mean all these up and down moves. So very simply, and we've been showing this in all our videos. The performance of swing is very very high. Nothing can be 100%, but I can definitely put 80% to it. Even though it's 90, I will claim 80. Okay, I will not claim 90. So look at all these points. Basically, the indicator moves from 0 to 100. All oversold conditions are below these red lines. Now, that doesn't mean it touches the red line and you buy. It means that when you get below the red line, you look for a reversal in price momentum. That reversal in price momentum could be on the hourly chart of RMI. So you can open a Nifty RMI and look at an hourly reversal. Or you can wait for a daily positive closing, which is a sign that, okay, if it is falling for 4 or 5 days consecutively and you close positive today and the RMI is oversold, that is a very good entry point. So or if you reach a panic low, like here on election day, market falls 1300 points, the daily swing updates live during the day. So even during end of the day, the reading is 10, but When we were down 1300 points on Nifty intraday, it was at 3. 3 means 97% of the stocks are negative. So at 3, I want to buy. Okay. Now, last week, we actually got 3 thanks to Japanese yen carry trade. This reading over here is 3. Okay. So actual closed at 3, not even intraday. And the next day, the average swing is at 11. Now I have a combination. So sometimes you get a combination of all 3. Okay. Now you look at this. So this is a combination of all 3, meaning कि ये भी ओवरसोल्ड हो गया, ये भी हो गया, और फिर तीसरे दो कुछ दिन बाद ये भी हो गया. All three, when all three get oversold, sometimes the PCR, because it's a 9-day average, can get oversold a few days after the swing indicators. The daily swing is the most fastest because it is not an average. The average swing is an average based same indicator. So it comes sometimes a day or two late. And the PCR is a 9 EMA of the open interest. It comes slightly later. So, but when you get a combination, it's even better. Sometimes you don't get a combination. Even then, you do get a bottom. Like for example, over here. Okay, so you got this oversold reading. Not over here, not over here. You still got a bounce from here to here. So for that, those short-term moves, which are 5 days, 10 days, I would use these indications. So this is why here I was saying, somebody asked me on Twitter, how are you confident? I said, look at this. This is at 3. Okay, so that is the reason for confidence. Apart that, some other indicators also fell in the same range. If I add, when I can keep adding, but 20-day advance decline ratio also reached the bottom end. So here, this also happened now. This has not reached. So it's not every time everything will reach, but once I get 2 or I get 3 indicators, it's a high level of confidence कि यहाँ से यहाँ तक तो जाएगा, यहाँ तक जाएगा, कितना जाएगा, we don't know, but you can retest the highs, you can retest 61% retracement, and that is your swing trade. So I would pay attention to these, and I'm not saying I'm only focusing here on the bottoms because we are in a bull market. At the tops, you get slightly divergences. So you did get a reading here, but you get a slight negative divergence before it falls. So for catching tops, you have to wait for a slight negative divergence in price and swing. After that, you'll get your sell-off. But at the bottom, it is usually a panic. Na? Everybody sells and khatam ho gaya bas. So that way, you get a very quick bottom. So this is what you should learn to use for swing trading.
Yeah. And Alok, this is only for Nifty. It is not meant for stocks because how we arrive to swing and average swing is a combination of stocks we calculate and then we display. So it can't be done on stocks. It has to be a combination of 50 stocks. Nifty 50, for example, we take at least 50 stocks we need. We take that 50 stocks, we calculate something, and then we are displaying. So it is not meant for individual stocks or even Bank Nifty. It is meant only for Nifty. Okay. Yeah. And okay, where to subscribe for Strike? Rohit, if you can show where to go and subscribe. And I mean, the moment you sign up, you get a 7 days free trial. Okay. And then you can go to plans.
So first thing you have to do is you have to sign up so that you have a login ID password. After 7 days, you have to simply go to this plans and billing. Okay. Moment you click on plans and billing, dropping down from here, you can choose any plan that you want. And your previous subscriptions show up at the bottom, so you know the trail.
Okay, Pushpinder is asking, can you use sentiment indicator for cash trades? See, again, go through the help section. Rohit, if you can just click on the help section, please. Yeah. Help. Yes. So the best features of Strike, just whoever is there over here, just go through the 6 videos, the best features of Strike. Click on the best features of Strike, Rohit. You'll get answers to all your questions. Just go through all the 6 videos. It will hardly take you around 45 minutes to 1 hour. And then you choose how Strike can help you. Is there any other questions? Yes, Mohit, I skipped your question. What is your question? I'm sorry. Okay, BSE scripts commodities in Strike. Okay. Mohit, thoda time lagega. But as of now, we are switching over to 1 minute. Probably this month end. We were on 5 minutes delayed data, but now we are shifting to 1 minute. We are working on that. After that, we'll definitely add the BSE and commodities. So Krishnan is asking, can I use monthly new buy signal for investing decisions? What else I need to do? Krishnan, you will have to go through the recording again because we have explained how RMI plus valuation needs to be used for investments. So you are supposed to go through the recording again. It will be there on our YouTube channel, strike_IC. It will get posted the moment we end the stream. So yeah, you can go through it. Okay, can you provide discount on Independence Day? Independence Day pay discount. Okay, we'll consider it. We'll see. Yeah. Uh, okay, mobile app. See, mobile app. The thing is, to develop this application on a mobile is a challenge. Okay, you will have to understand all these charts and all to display on the mobile. It's a challenge, but we are finding a very good designer who can actually, uh, help us design this. Yeah. And by the way, guys, we are recruiting developers, front end, back end developers. If you are one among them and you are having 2 to 3 years of experience with Next.js, please do send an email to chavan@indiacharts.com. Mehul Desai, definitely you can download the data in Excel. Just right click and you can download. Applicable only at few places, not across the system. The scanners, valuation scanners, whatever Rohit thought now, it will come before this month. Yeah, perfect, Rohit. Okay. Okay, SS0802. Don't worry. If the payment has got failed, it will reimburse for you. Okay. You just need to wait for 2 days. Usually it takes. If it doesn't come, then speak to your bank because uh, there might be a problem at the bank end also. But usually you'll get the refund. So yeah. Anyways, guys, if you have not used Strike, please do it. Uh, if you are not a subscriber of Strike, if you are still thinking, you should not be thinking. You should be subscribing today. Just go to plans and billings and do subscribe and start using Strike. The valuation scanners will be live before this month end, Ramesh. I already took up your question. Okay. Uh, yes, those who are having any issues, regarding Strike, uh, those who are having any issues on Strike, you can call us up on 6361666629. That is our support number. 6361666629. Thank you, Amit. I hope everyone will start using Strike with this. Let's wind up for today's session. Thanks, Rohit. Any ending statement on Strike? How Strike has turned your own trading? This one.
It's made life so easy. I don't have to maintain Excel sheets anymore.
Hmm.
See, for
Yeah.
other people, they may not get it. A lot of this data today, they are seeing it. It's so easy. Looking at historical
Hmm.
advanced decline ratios, positioning, PCR, all of this we were maintaining on Excel sheets earlier. Now I don't have to do it. It is just automatically updated every day from the NSE files data. I just have to come, look, search, scan, find my stuff, what I
Yeah.
want. I in fact created a momentum portfolio using the technical scanners.
Hmm.
So people who heard of momentum trading, momentum portfolio, you can just create a setup for momentum, stocks that are trending, and have a list. That list will keep auto updating,
Yeah.
and you can focus on it.
Yeah. Okay, Kapil. Yes, we are shifting to 1 minute within this month or max by September first week. That will be a killer. Right now, we were on 5 minutes delay, but now we'll be shifting to 1 minute. So that should really, solve all your issues. Uh, yeah. Okay. SS0802. Definitely, I'll get in touch with you for the mobile app. Thank you so much. Uh, Yes, Rohit, thank you. Wonderful session once again. Uh, to all the viewers, once again, start using Strike. Tell your friends whoever is there into trading and investments, spread the word Strike and do subscribe and help us in growing. Definitely, we'll add a lot of data more. Um, you know, we'll be adding a lot of data right from BSC to commodity.
I'll add one more thing for those of you who have a large network and who are really interested in becoming affiliates. Also, get in touch with us and become part of the network. That's
Yeah,
the way to think about it. So that helps in spreading the word even more.
yeah. Thank you, guys. See you next week. Every week we'll be doing the webinars going forward. So please join us every week and ask your doubts. With this, thanks Rohit. Thanks for your time. It was
Thank
fantastic session. Bye
thank
bye.
you.